Hey there, my name's Chris Richards. I am with the Richards Mortgage Group. I've been a licensed mortgage broker since 2008. We get a lot of inquiries about a zero down mortgage for a home purchase, and that's probably because saving for a down payment can be tough, especially in a high cost of living situation. So today we're going to discuss a program that can help you create a zero down mortgage. And we're going to talk about what it takes to qualify for that. The program is called a borrowed down mortgage loan insurance program, and it's available for mortgage brokers across Canada. It's made possible by Genworth Mortgage Insurance. They're like CMHC, and they provide mortgage default insurance to mortgage lenders and banks. So I'm happy to help you determine if this program is a fit for you. So basically, how a borrowed down program works is, one, you need to qualify for a 95% mortgage based on the house price, and we can help you with that. And two, you have to be able to qualify for a personal loan from an independent lending institution for the remaining 5%, and we can help direct you in that regard as well. Those two combined, the 95% loan and the 5% personal loan, create 100% of your purchase price, and that's how we get to zero down payment today. So let's recap what it takes to get a mortgage in Canada. As a borrower, you need three things. One, your income needs to be sufficient to pay the mortgage and your other debts. And in the case of a borrowed down, the personal loan payment becomes an additional debt that you're going to have to pay each month. Two, your credit has to be reasonable for a mortgage, and in the case of a borrowed down payment mortgage, your credit has to be excellent. And three, you need to have at least 5% down, which we're going to get from the other loan that you borrow. And by the way, 5% down is whether you're a first-time buyer or a fifth-time buyer. It doesn't matter. Some people think that only applies to first-time home buyers. So the next question you want to ask me is, Chris, can I mortgage qualify? So it's the same for any mortgage. Your income needs to be stable and predictable. For this particular borrowed down program, we recommend that you have at least 2 years with your current employer. If you have less than 2 years, it's still possible if you are on a guaranteed salary, and preferably with some experience in that field. Your income needs to be sufficient to pay for the new mortgage. It also has to pay for whatever other loans you currently have, vehicle loans, credit cards, lines of credit. And it also has to be sufficient to pay the down payment loan. The calculations that mortgage lenders use are your debt to income ratios, and the exact same formulas apply. You have to be able to afford all of your debts plus the mortgage. So I can do this calculation for you, but if you're trying to just sort of generally listening to this video and you want to say, could you possibly qualify? The rule of thumb I have is the house that you're looking for should be no more than 4 times your taxable gross household income. So that's your T4 income, or line 150 on your tax return. Now, if you have really low consumer debts, then there's a little bit of wiggle room above that 4 times. If you have high consumer debts, like multiple vehicle loans and high credit card balances, I had a conversation with a person last week, and they had 2 vehicle payments at $700 each. So they had over $1,500 a month on vehicle payments. It didn't work for them. So if you've got high balances, you probably need to reduce some of your debt to make this program work. Okay, so we talked about income. You also need to have good credit. Now, to get a mortgage, you need to have reasonable credit. To get into this borrowed down payment program, you actually have to have pretty darn good credit. You have to have always pay your bills on time, no late pays, no collections, nothing like that. If you don't have much credit history, or you've had some ongoing repayment problems, likely a better solution for your down payment would be to maybe get a parent or other family member help you with that, as I don't think this borrowed down payment program's going to be a fit. So in conclusion, You can synthesize a zero down mortgage. It's a 95% mortgage and a 5% personal loan. If you have excellent credit, stable employment, low to reasonable consumer debts, and the house that you're after is no more than 4 times your gross taxable household income, then we should talk more about this borrowed down payment program and how it might work for you and how you can start building home equity today. I'm happy to help you out. Again, my name is Chris Richards. I'm with the Richards Mortgage Group. Our number is 1-888-540-1715. I'm extension 2. All right, hope to hear you.